In a currency collapse or a worldwide currency event, I believe China would try and reset with gold, which is why I think the U.S. should really go forward with a strategic Bitcoin reserve, because I think it'd be a way to leapfrog them and we'd be better off. Bitcoin could go up 10x and it would only be the size of the gold market. So we could have $1 million Bitcoin per coin, and that'd be the same size as the gold market. I think that's going to happen. I think that's probably likely to happen within 5 years, maybe 7 years at the most. I mean, maybe less. Since I got into Bitcoin, since I now own Bitcoin, since I understand Bitcoin and what it is, I now feel like I can't outrun my money. You know what I mean? That I will always, every year, I will grow richer just for having saved in Bitcoin terms. And the feeling of relief that you get when you enter that world, it's a really huge, it's a big burden off your mind, because running on the treadmill, the other side, playing the fiat games, that's a hard life. I mean, it really is.
Lepard begins by acknowledging the widespread recognition of gold as money, with around 8 billion people globally understanding its role in preserving wealth. However, he highlights that Bitcoin is gradually gaining traction, with several 100 million people recognizing its superiority as a form of sound money. He emphasizes Bitcoin's advantages, such as its better stock-to-flow ratio and decentralization, making it an ideal candidate to replace gold in the long run.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I mean, longer term, absolutely. Bitcoin completely demonetizes gold, but that could be 30 years. Okay, that's a long time. I won't be here. Shorter term, I mean, you got to understand, 8 billion people know that gold is money. Several 100 million or more understand that Bitcoin is sounder money and better money, lower, better stock to flow, all that kind of stuff. Countries, if they're likely to reset, I mean, like China doesn't believe in Bitcoin. I think China's bet heavily on gold. We know China has more gold than they say they have. I think they're thinking they would back their currency. In a currency collapse or a worldwide currency event, I believe China would try and reset with gold, which is why I think the U.S. should really go forward with a strategic Bitcoin reserve, because I think it'd be a way to leapfrog them and we'd be better off.
Yeah.
But, let's talk about when gold will replace Bitcoin in terms of value. So total gold market cap
the
today,
other way around, where Bitcoin will replace
that's what I meant. I'm sorry. That's a Freudian slip, right? So Bitcoin is roughly $2 trillion of market cap today. Gold is, I don't know, it was 18. I guess I haven't run the numbers at 2,900. It's probably getting to be 19 or $20 trillion of value. So the total gold market is 20 trillion, although not all that's available. Some of it's in museums. A lot of it's around women's necks, although that could be melted down. But the point is that Bitcoin could go up 10x and it would only be the size of the gold market. So we could have $1 million Bitcoin per coin, and that'd be the same size as the gold market. I think that's going to happen. I mean, the power law projects it. A lot of things project it. So I think that's probably likely to happen within 5 years, maybe 7 years at the most. I mean, maybe less. And then after that, I think it just kind of it goes up 10x again. I mean, I'm kind of with Michael. I mean, it's going up forever, Laura. I mean, it's just, people look at me today and they say, well, gosh, Laura, you bought it for 10 and it's at 100. How do I pay 10x what you paid for it? And I give them two examples. I say, one, consider the financial system to be the Titanic. And these are lifeboats and, seats on a lifeboat. I paid $10,000 for my seat. It's $100,000 to you right now. Do you want it or not? Your choice. You got to pay more, but it's your choice. I mean, the other way I say it is, if it continues to compound at the rate it has, it'll be $1 million in 5 years. It'll be $10 million in 15 years or 20 years. And so, if that happens and you bought it at 100, you're going to feel, very good that you bought it at 100, and people are going to be looking at you and say, God, I got to pay 10 million for it. You got a whole coin for 100. Boy, that's different. I mean, in the same way that I look at Max Kaiser, and I bought my first one for 400, and Max bought his for $1. And he was jealous of Trace Meyer, who bought his for 50 cents. So, it's all kind of a matter of, where you get
It's
in.
all
But
relative.
it's all
Of
relative.
course.
Yeah.
Yeah.
It's the soundest form of money. It's a technological invention. It's the soundest form of money that's ever existed. And so
Yeah.
therefore,
And mathematically, it's going to keep going up
it's
forever.
just going to keep going up forever. So,
Mhm.
and that's, by the way, that's a really beautiful thing, because what it does is it changes around who wins the game. Right now, you win the game by playing around with money, by borrowing and speculating, by gambling, and doing all kinds of financial engineering. Okay, if we have an asset that goes up in value continuously, and all you have to do is hold it and sit on it, savers win the game, and that's what you need. You need people who save money, because savings is what leads to productive capacity increase. You can do long time preference things. So that you can build. When is the best time to plant a tree? Today. Yesterday, but the next second best time is today. And good things take time, right? And so you can take the time to educate yourself. You can take the time to build high quality things versus doing shitty things that on a quick basis to try and just make the maximum amount of cash that you can make. And more importantly, I think it's really good, as I notice that I'm getting closer to retirement age, is you can act, and I see what among my peers, what I see that's sad is people have worked their whole life, maybe their house is paid off, maybe they have savings, they're in the 60s or 70s, and the savings are substantial. By anyone who would look at them and say you're rich, although modestly so. But they're saying to themselves, I can't stop working because I don't know how long it's going to last. I might live 30 years and I'll outrun my money. And so suddenly that whole dynamic gets flipped on its head. Here,
Yeah.
Since I got into Bitcoin, since I now own Bitcoin, since I understand Bitcoin and what it is, I now feel like I can't outrun my money. You know what I mean? That I will always, every year, I will grow richer just for having saved in Bitcoin terms. And the feeling of relief that you get when you enter that world, it's a really huge, it's a big burden off your mind, because the running on the treadmill, the other side, playing the fiat games, that's a hard life. It really is.
Lepard stresses that no one should put 100% of their wealth into any single asset, no matter how promising it appears. He recalls a conversation with an investor who had gone all in on treasury bills, missing out on major gains in the stock market. His advice? Take a reasonable position in Bitcoin, whether it's 10% or 20% of one's portfolio, and take advantage of volatility as a buying opportunity rather than a deterrent. He compares Bitcoin to Amazon in its early days, noting that Amazon stock went through multiple 50+% drawdowns before reaching its current valuation. Bitcoin follows a similar trajectory as a network-driven asset, and those who understand its long-term value should welcome price dips as an opportunity to accumulate more.
You and I are maximalists, and I hope most people listening to this become maximalists. And I hope, I know a lot of other people like to gamble in crypto or, participate in crypto. And I consider that all to be really fiat-ish sort of behavior. As we all know, the Bitcoin innovation is the immutable proof of work that secures the ledger. And really, there aren't any other cryptos of any kind of scale that have that. And so they all, leave people vulnerable to being rugged. And I hope that the U.S. crypto reserve really is only Bitcoin, although I'm sure the crypto side of the world, XRP, all those guys, Brad, et cetera, are trying to push to get their stuff in there, Ethereum, et cetera. But the answer to the gentleman's question is, I feel very strongly that Bitcoin will survive, that it's not killable, that it's now fully decentralized and too large to be undone. And so that it will become the premier form of money. I think my kids will pay for things in Satoshis.
I think so too. I think the only thing they can do is regulate the hell out of it.
Well, they can slow it down. There's no doubt. And I've talked about this. And so let me just give you a bad scenario.
Please.
Team Red won, and I'm glad they did, versus Team Blue from a crypto point of view. And but that could change. In 4 years, if things don't get better and Team Red does dumb stuff, Team Blue will win. And we know Team Blue doesn't like crypto. And so what they would do is, they would try to maybe tax it. They'd say, hey, you guys are getting unfairly rich on the back of our currency collapsing. We don't like that. We're putting 90% tax on gold, 90% tax on Bitcoin. They could even do what Roosevelt did. He seized the gold in the 1930s. They could try and seize the Bitcoin. It wouldn't be hard for them to call up BlackRock and Fidelity and say, send all that ETF Bitcoin to us, and give those
If it's not in self-custody, yeah.
give those people cash, which is why I argue for self-custody. So, that's all a possibility, and we just don't know how this is going to unfold. I mean, these fourth turnings tend to be kind of messy events, and I talk about that in the book. There's a chapter on volatility and so forth, and we all have to be prepared, for all outcomes. And which, by the way, is why, you don't want to ever have. I mean, I met with a gentleman last week, and he'd taken 100% position in one thing. He was extremely conservative, thought the stock market was overvalued. He was 100% in treasury bills. But it was killing him that all his friends had made a ton of money in the Mag 7. And I said to him, and that's why, even if you didn't believe in the Mag 7, you might have wanted to take a 10% position in it back when they did. And he said, well, what do I do now? And I said, you buy some Bitcoin, you take a 10% position in Bitcoin, 20% position. He said, yeah, but it's so high. And I said, you're doing the same thing. You're trying to time it. He said, what if it comes down? If there's a big financial crash, it's going to come down. I said, yeah, it might. And guess what? That would be a buying opportunity. Do you know what I mean? So you get started, and then you let volatility become your friend. I mean, Bill Miller became a very wealthy man by playing the volatility in Amazon. Amazon was a network business that was adopted, and it probably had 10 or 12 cases where it was down over 50 or 60%, very much like Bitcoin. Mm-hmm. And he just believed in the concept, and when it would go down, he would buy more of it. The facts that we do know are that there's a lot of demand coming from the COMEX to get gold bars shipped from the LBMA. So the big central repositories of gold, and of course, but this is one of the problems with gold compared to Bitcoin. Bitcoin's distributed, and there is no central repository. Yeah, there is no central repository, and we can all see all the addresses, right? But in the gold world, the big central repositories are in Switzerland, London, and the COMEX in the United States. And we've seen just enormous increases in volume of gold being demanded in the United States for COMEX delivery from the LBMA. And then the LBMA came out with some lame excuses that, well, it's heavy and their lorries blocking the roads. And so it's going to
right.
Did you see that? It was pretty funny.
Yeah, I did.
There's going to be a big delay in getting you your gold. I mean, normally we could have it to you.
It's a bit heavy. It takes time.
Yeah, right. And so, of course, that is one of the flaws of gold. I mean, I can send you $1 billion of Bitcoin in 10 minutes. But yeah, so there's been a lot of demand, and there's a lot of tightness in the market, and we see spreads are higher everywhere. We see premiums in the Far East, et cetera, all of which suggests that somebody and many parties are suddenly deciding that they want to buy gold, that it's important to own gold. And, there are some who've even suggested it might be the United States government in terms of, just trying to think about a reset. There have been some who've suggested that it's just very wealthy individuals who are trying to protect their wealth. And there are lots of billionaires in the world. And, if they get worried about the underlying currency, they could say, I want some gold. And the other thing I would add is that those of us who've been in the gold trade for a long, long time and studied it very, very carefully can say with a very high level of confidence that there's a lot of paper gold, what I would call, ETF and, gold futures commitments that don't represent actual ounces.
Right.
And so an ounce of gold is a physical thing. You can't replicate it. You can't print it. You have to mine it out of the ground.
Yes.
And we believe that there could be as many as 10 or 100 claims on every single one of the ounces that is above ground. And if that's the case, what you really have here is fractional reserve gold, like fractional reserve banking, and it becomes a game of musical chairs. And so if 3 out of the 10 people say, I know you owe me some gold via paper, I'll just send you the paper. Why don't you send me the ounce? Well, there won't be enough ounces to go around, so the music stops. Who's got a real physical ounce? Who's got a chair? And so that's why I don't trust the ETFs like GLD. There is one ETF I trust, is the Sprott Trust, PHYS. It's up in Canada. But if you're going to buy your gold through an ETF, that's the only one I trust. And that's why, just like with Bitcoin, we say, not your keys, not your coin. With gold, I say, if you don't hold it, it's not yours. If somebody's promised to give you gold, well, if the promisor is Lehman Brothers and they fail, you're not going to get your gold. And I think there's some of that out there. So it's an interesting development. It comes at a very interesting time, right? I mean, with gold at record highs and Bitcoin at record highs. I mean, all of these things indicate to me that we might be on the cusp of the quote unquote suddenly phase. We might be. I don't want to jump the gun. I don't know, but we could be.
For investors who prefer gold, Lepard recommends only holding physical gold or investing in trusted vehicles like the Sprott Physical Gold Trust rather than standard ETFs like GLD. Lepard concludes by discussing the idea that we may be on the cusp of a major economic shift. Both gold and Bitcoin have reached all-time highs, signaling a potential turning point in the global monetary system. While it's difficult to predict exactly when a major reset will occur, the acceleration of Bitcoin and gold adoption suggests that a paradigm shift could happen suddenly, as described in historical economic transitions. Please like and subscribe.